Morning, everybody. We're live here with Fractal Effects. Please make sure you read the disclosure. If you're following along today, make sure you do in the demo account. This is for educational purposes only. We are not financial advisors, and this is not financial advice. Please make sure to check us out at fractaleffects.com. Let's jump onto the charts. So we have NAS on the left. Excuse me, an ES on the right. Sorry, your chart's moving a little slow. Anytime you go live, it's always a bit of a lag. Let's drop down to the 5-minute. We do have a bullish push right now. Sorry, taking a minute for everything to load here. So we're at the top of the range. We do have a upside expansion model. We've already taken out Tuesday's range, which usually Thursday does. It's painted out by the aqua line of our indicator. Now we're just waiting for confirmation. ES in a similar position. Again, just waiting. Confirmation, retracement, and extension. We're well above the EMAs, extremely bullish. We're sitting in a higher time frame PD array right now, so we could get could get a pullback right now. Excuse me. Getting some divergence on the TDI. We could get our confirmation soon. Right at the top of the range. Again, just waiting for confirmation now. We have an upside expansion model. We're well above Tuesday's range. We've already tapped into it, cleaned it out. Now let's see what kind of confirmation we get. Retracement and extension. A lot of volume right now. This could be our confirmation. Where we want that body to close on the 5-minute. There's New York's fair value gap down here. There's Tuesday's range, which is another key zone. And it seems to be roughly around the 50% mark. Drop in a Fibonacci. We got about 2 minutes, 57 seconds left on this candle. We might get a fast move today. About 1 minute, 53 seconds left for confirmation. Market driving higher. We could get that confirmation right now. One minute, 18 seconds left. Forty seconds left. 23. Let's see if this confirmation sticks. And we'll look for that retracement and an extension. Seven. Okay. Oh. And it just took away the confirmation right there. See, that's why we wait for candle body to close right at the last second. Closed within the range. Now let's see if we get it on this next candle. Still just waiting for confirmation. Slowly getting it, but 3 minutes 52 seconds left. We could just get another wick. Remember, until that candle body closes, we do not have confirmation. The top of the range. Just patiently waiting. We're pretty close to previous day's highs, well above previous day's lows. Today is Thursday, as mentioned before. Thursday usually has a retracement phase, where we retrace back into Tuesday's range, which is painted out by the indicator right here in the aqua line, so that's already happened earlier in the day, earlier in the morning, I should say. That is not a coincidence. Literally took out all of Tuesday's range, and it stayed within these lines. We had a bit of a rejection to the downside. Now we're sitting high. Upside expansion model. Still waiting for that confirmation. Remember, the indicator paints out the key zones for you. All the major fair value gaps of interest are painted out right there. We have a green bullish box. Getting a lot of anemic candles right now, which means that it might want to retrace. But again, hopefully let's get a confirmation first, then a retracement. Remember to check us out. We are live Tuesday, Wednesdays, and Thursdays, 10:30 Eastern Standard Time to roughly about 11:30. Our goal is to be in a trade within the first hour of the range formation, so 11:30, no later than 11:30. And if we're in a trade, we watch it all the way up to noon Eastern Standard Time. If you're checking us out for the first time, please hit that subscribe button, those notifications so you know when we're live. Check us out at fractaleffects.com, where we use algorithmic trading. We have a dashboard with 20 years of aggregate that we use with the indicator. Getting a lot of anemic candles right now. On the TDI, we're well above the stationary 50 and the liquid 50, which is the yellow line there. We're getting close to overbought. Same thing with ES. Seeing a lot of anemic candles. On a 4-hour, we're sitting in a fair value gap, top side of it, which might force a retracement. Again, just patiently waiting. The reason this strategy sets up during this time is the dust is already cleared from New York Open. This allows us to see the dealer's hands, that's to say. Clearly they're pushing to the top side. We didn't get caught up in the manipulation of New York Open. Still waiting for a confirmation. Right now the session bias is bullish. And at the same time we're sitting in a higher time frame fair value gap. So it could go either way, but we're hoping that we get confirmation retracement possibly back into maybe even the weekly range right here, possibly into the fair value gap. Just going to switch these. Got NAS over here. As a matter of fact, I'm going to leave this up. We're going to watch the 5 and the 1 minute. Slowly getting that confirmation now. We got about 1 minute, 46 seconds left in that candle close. We want to get that confirmation and see a retracement happening. One minute left in that candle close. Twenty-five seconds left. Market still driving up. We have our confirmation. Now we're just going to wait for a retracement again. Hopefully back into the 20 EMA. Any one of these key zones. We could get an outside the range confirmation too, where it just bounces off top range right here in the gray line or the dotted line. Just patiently waiting for that retracement now back into the zone. Bounce off of key zones. We want to see rejections happening. We do have a fair value gap right here. Definitely an area of interest, but we need more confluence. We're well above the 238 EMA, extremely bullish. Let's see if we can't get that confirmation. Sorry, the retracement. Just waiting for retracement right now. So that's our second area of interest. Our first is obviously top range right here. We get rejection there, but we want to see more confluence. Getting that retracement now slowly. You want to see telltale signs that this thing actually wants to push up. We want to see a proper retracement. We want to see it hit some PD arrays where all the key points have been painted out by the indicator, even the fair value gaps. These are regular fair value gaps, and we have our main fair value gap of interest. The only thing else that we've added to the strategy is just dropping an EMA on top of it. And every now and then we'll take a look at the TDI. But everything else is actually all within the indicator itself. We have a green bullish box right now. Bullish confirmation. Now let's see how deep this market wants to retrace. Looks like we're getting a rejection off of the top of the range. We want to see a few candles actually. Remember, if the market leaves without us, that's fine. Day trading isn't every day trading. We want to see all of the points of confluence match up. We want the market to come to where we are, where we want it to be. If you're chasing the market, that's FOMO. We got about 2 minutes, 20 seconds left in this candle, seeing a bit of a rejection at the top of the range. Remember, if you're following along with us, make sure you're doing a demo account. We should see at least a retracement back into the fair value gap here. We're getting a rejection. 55 seconds left. Ten seconds left in this candle close. Here comes the next candle. Again, I'd like to see it retrace at least back into the 20 EMA. Tap this fair value gap. There was a strong indication that this thing wants to push up. Market's still moving down. Finally getting some displacement here. We want to see strong candles pushing down. Now we're on the other side of the range. This candle looks like it's wicking. 2 minutes 34 seconds left in this candle. Got 1 minute 34 seconds left. Still pushing. Again, I want to see it come down a little lower. So far we have 2 candles wicking off the opening range. Sorry, top of the range I meant. We want to see it pull back into the fair value gap, 20 EMA. I don't like it sitting there. This is one of our key lines, key areas of interest. I want to see at least another candle wick from there, then another 5-minute candle wick from here, if we're even thinking about taking it from here. And it has to make sense. Right now, I'm not seeing any important fair value gap on the 1 minute. Right now there's people going along from here. Right now what the market is doing is engineering new liquidity. The only thing is, this candle didn't sweep this previous one. So I'd rather wait for, again, a deeper retracement. Again, leaves without us, it leaves without us. At the beginning, you're just looking for one successful trade a week. With a proper risk to reward of 1 to 3, that's 12% a month. Compounded. It's also about money management, risk to reward. It's not about just finding an entry. Most traders will tell you if I get the proper entry, I'm going to be fine. But no, it's about actually managing your position, knowing when to get out. Right now we're back at that fair value gap. I still think we're going to have a deeper retracement. Remember, higher time frame PD arrays like this fair value gap on the 5-minute is more valuable than the smaller time frame PD arrays than the 1-minute. Especially when they haven't swept anything. There was no sweep here. Still pushing down. Still just wait. Remember, we want this to look obvious. The dust is already settled. We want this next move to look obvious. Otherwise, we don't take it. We're probability traders. The higher probability is to take a trade from here once we see an actual candle rejection and a wick. And then we want to see the same confluence on the 1-minute. We have a third candle about to close, 41 seconds. Get some rejection there again on the 1-minute, but more interested in this higher time frame, 5-minute. Market finally pushing down. We want to see it sweep all these lows, hit one of these PD arrays, and actually give us a proper setup. There we go. Now I want to see what it does here. I want to see it hit this 20. Excuse me. We're below the 50 EMA on the 1 minute. This thing could give us a deeper retracement now. I want to see it hit that 20. Now we're slowly getting to that zone where we feel comfortable, where we're seeing more points of confluence. Like I said, I want it to look obvious. I want to see it bounce off this 20, might even push down a little bit further. And then now that we're below the 50, I want to see a push above the 50 and a rejection. I want to see a fair value gap of interest here. We most likely might not get this low, but we'll see. This is how the indicator protects us. For whatever reason, let's say this market just kept pushing, 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 and broke the bottom here. That's a false stay. Because remember, we're probability traders. With this indicator, when you have a confirmation to one side, there is a 75 to 80% chance that the bottom of this will not be broken. So if it is broken, our probabilities drop to nil. Now we're below that 50, bouncing off this fair value gap. I want to see more confluence. I want to see a couple more candles. I want to see if it touches this 20. Too close to not touch it. This has now become our intermediate low. We want to see a fair value gap presented on the right side. Right now it's just feeding off the fair value gaps to the left. We're getting a strong rejection here, 4 minutes, 23 seconds. Let's see if it sticks, or if it just pushes through. Still have not hit the 20, but we are in that fair value gap. Bullish confirmation, green box, upside expansion model. But until we actually see proper wicking happening, this might even push down further. We have yet to hit that 20 EMA. Remember, stay patient. We want to see all the telltale signs. Right now we're bouncing off the consequence encroachment, which is the midpoint of that fair value gap to the downside. 2 minutes 50 seconds left of this candle. Now we've hit that 20 EMA. We've swept all the liquidity down here. Remember, we're looking for a buy or nothing at all. So if this thing just keeps driving, breaking the bottom, we didn't lose anything. But we want this thing to look obvious. I want to see an intermediate low here. I want to see a fair value gap. I want to see the market push past these EMAs and give us a clear-cut signal this thing wants to drive up now. We have hit this fair value gap. We're rejecting slowly from it. We've hit the 20 EMA. Still nothing of interest. Still just pushing. Again, we expect a certain consolidation at this time. Getting that bounce. Remember, the deeper this retraces, the more it kind of makes it easy for us. With the targets really just being top range even, depending on how late in the game we jump in. Ideally, we want to go one standard deviation above this, but still just waiting. Another bounce off that 20 EMA. I don't like this consolidation. I want a clear-cut intermediate low. I want to see one specific candle that stands out from the rest of these. Right now we got 2, 3 of them on the 1 minute that are literally have the same lows. I believe currently it's this one. On the 5 minute we're getting that rejection again. We're still waiting. I want to see a fair value gap on the 1 minute. Got 51 seconds left for this candle close. That could be our fair value gap. I want to see it get above these EMAs because right now we're rejecting. Right now we've already had a cross. Could reject and keep pushing down further. We want a clear-cut sign. Keep in mind nothing's 100%. Even with all the confluence in the world, you could still have a losing trade, but as mentioned before, we're probability traders. We want to make sure we jump in with at least 70% probability, 70% and higher. Anything lower than that, you're gambling. So we have our fair value gap of interest now. I want to see it dig into this and get above this EMA. Sorry about that glitch. Because right now we actually have a crossover. So if we have too much rejection happening here, that's not a good sign either. We want to get on the other side of these EMAs and reject. So we want to see the candle close up here, one reject right into this fair value gap, and then keep driving. If we see that, then that would be our buy signal. Nine seconds left. So far looking good. 2, 1. That could be where it's pushing from now. We get a breakaway gap. So next fair value gap that it sinks into, any retracement here, most likely going for a buy. Now it's using that fair value gap to kind of push down from most likely. Anytime you have breakaway gaps, we aim for the next one. Again, that being our target. And you want to manage your position. You want to make sure that as soon as you get to 2R, which is roughly around, I believe we're already in 2R. No, almost. Right here. You want to move your stop losses to break even. We will come back, tap one of these fair value gaps. Again, that's where you would move your position to break even. Take a little off the table as well. Market might retrace back into this fair value gap, hit the CMA again and reject. There's going to be plenty of opportunities. It's never just cut and dry. Anytime you have an EMA crossover, there's always a retracement. But yeah, that's 2R. Okay, we're now at 2R. For anybody who's in a trade right now, you can move your stop losses to break even. You can take some money off the table with our TP still set up here, top range. For anybody who's not in yet, again, we might have another retracement back into this fair value gap, bounce off of these EMAs, and then continue up. That's why it's important to take some off the table. You will always most likely get a bit of a retracement. Too many fair value gaps left here, too many breakaway gaps. Most likely I'll dig into this one, touch this EMA. And again, if it doesn't, if it takes off, for those people who didn't get in, that's okay too. We're only looking for one opportunity a week. So we have an EMA crossover now. Should get, I'm hoping, at least another swipe at it. Hit this EMA, tap this fair value gap. We can get rid of this one now. We want to see tracement here. For anybody who already got in, again, you're in a safe trade, as your stop loss has already been moved to break even. For anybody who hasn't, that's the key zone right there. We want to see a rejection off the consequence encroachment of this fair value gap, that dotted line, and this 20 EMA. We want to see a full candle wick close here. And then the next one, we want to see push past it and close above it. Then that's the telltale sign. With targets at 18,316. Low-hanging fruit. This is the low-hanging fruit. Could it go higher than that? Of course. We're looking for possibly one standard deviation. It could go as high as 18,394. For anybody who wants to drop in a trailing. My apologies, guys. With the live stream, it slows down everything. We'll make sure we fix that. 18,394. Again, it's hard to pinpoint. But anyways, we're back at that fair value gap. Bouncing off that 20 EMA. Haven't yet tapped it, actually. There we go. Starting to get some displacement candles. That's what we want to see. We want to see this thing just push, push, push with our low-hanging fruit being that first green line. There it goes. That's 1 to 3. Remember, we're not about getting greedy. As mentioned before, we aim for the low-hanging fruit. So we're in a safe position right now. Stop loss has been moved to break even, taking some off the table. That's our low-hanging fruit. As far as getting up there, we can take a look at what that would look like as far as the risk to reward. Obviously, it'd be much bigger, but then you're getting greedy. Especially this late in the game, already at 11:30. It's a 1 to 6, but we're already at 3.59 if we hit our take profit. A whole bunch of gesticulation happening now. Let's see this thing push. We want to see displacement candles moving to the upside. Could it take one more swipe down, tap into this fair value gap that it hasn't actually touched yet? Sure. But for the most part, again, we're in a safe trade right now. $11:35 Eastern Standard Time. As mentioned before, our goal is to be in a trade before 11:30, and our goal is to be out before noon. Coming back to that 20 EMA. Now it's just about seeing if this thing hits our TP or turns around, but we've already taken money off the table. We are already in a safe trade. Ideally, we want to see displacement candles. We do not want to see these small stalling candles, these anemic candles. We do not want to see too much gesticulation happening here. We want to see a driving force now. Otherwise, again, it could dip in at this fair value gap. Hitting that 20 again. As mentioned before, once we see this crossover, we want to see a pullback. Didn't quite get it there. So it could be getting it here, or it could be tapping into this fair value gap. Let's move this out of the way. It's a good rejection. We want to see it hold. We want to see this candle close. As mentioned before, we want to see the next one shoot past it. Still just gesticulating. We want to see this candle. Not a good sign here. We want to see it drive higher. Push past this now. Close above. There you go. I want to see more of these candles. How much time left on this? We have 16 seconds. We're still above the 50 EMA. Still just gesticulating. We're in technically this fair value gap now. That's what you're seeing. Another swipe. And it's taken out our stop loss since we broke it to even. So that's why it's important to manage your position. But again, if this thing closes above this, that's still a good play. Maybe you'll do one more swipe at the at the fair value gap and hit that 20 EMA. This candle displaces above it and closes above here. "21 seconds left of this candle close. We're already at 11:41. So if this candle closes and engulfs this one, and that is just another rejection within this fair value gap to the upside. Still in that key zone, still pushing off that fair value gap. Again, there is a potential second entry here now. But since we took out those lows, this has now become a new intermediate low. I now want to see if another fair value gap created off of this in order to actually be interested. Hitting the 50 again, another rejection, still within the same fair value gap, still above the 20. A lot of gesticulation happening here. And again, they do this where they'll blow out your stop and still push in the direction. So we've already taken money off the table. We had a safe trade. It hit our stop loss. Now there's a potential second entry here, but I want to see another fair value gap. We're wicking, 11 seconds left. We're above the 50. This is wicking above the 20. Another wick at that consequence encroachment. This thing might want to push up from here now. Again, they like to do what ICT calls turtling, taking out some liquidity one last time before pushing up. Let's see if we get that push though, until there's an actual fair value gap created here. There's no telltale signs. We want to see displacement candles pushing up. Remember, your targets would still be the same. That's the low-hanging fruit, top range. It's not letting any fair value gaps form. We want to see fair value gaps. We're at 11:45. We'll follow this to noon, or at least until we see a push out of the zone. Another rejection off the 20 EMA. But again, no fair value gaps created here. Most likely get one from here. 3 minutes, 53 seconds left on the 5-minute close. Might do one more sweep down to hit that 20 EMA. Hit the consequence encroachment one more time. "13 seconds left until I actually see a fair value gap to the upside. I'm not interested here. This is just going to be a whole bunch of consolidation and possibly a push down then. That's why it's important to move your stops. Manage your position. Again, more and more wicking happening, but until a fair value gap is created on the 1 minute, does not interest me. About 13 minutes left in the stream. Still just bouncing. No fair value gaps to either side right now. The only fair value gap that's still holding is the 5 minute. This one's been wicked through. Now we're on the other side of that 20 EMA again. Coming back down to this 20 EMA. Ten minutes left in the stream. We're now under the 20 EMA until I see this get over the 20 EMA and give us a fair value gap to the upside again. Not interested. Now we're back over the other side. Haven't quite hit that 20 EMA. Still no fair value gaps. Eight minutes left. This late in the game, unless I get an next fair value gap, not really interested. So they turtled our position twice. Above that 20 EMA, getting some rejection. Still no fair value gap. A whole bunch of consolidation on the 5-minute. We've not broken out of this zone since 11:25. Still bullish though, still above the 20 EMA. Bullish confirmation. No clear-cut entry though. Just a bunch of gesticulation happening. Finally a push. Let's see if we get a fair value gap here. About 6 minutes left in the stream. And sometimes they do this where they do not present a fair value gap. They just push that market up slowly. But again, we're not interested in that. We want to see telltale signs. Without that fair value gap, this thing could easily just plummet. Five minutes left in the stream. This thing is driving up just slowly. Four minutes left, still just gesticulating. No clear fair value gap created to either side. Not on this side, not on this side. The only bearish one was here, but we've kind of pushed past that. Bullish one's right here, just gesticulating. Finally getting a push to the top side. Got 3 minutes left. Let's see if we actually get any displacement candles and hit that low-hanging fruit. So we took one trade, hit 2R, moved our stop losses to break even, took some off the table, so we were in profit. It hit our stop loss, turtled our position twice, and now it's moving back up. I'd like to see it at least hit this green line. And if we hadn't moved our stop loss, we would have actually had a fully successful trade. Remember, our stop was down here at this fair value gap. But I'd rather manage my position and take some off the table than to hold and potentially lose a lot more. What if we wanted to come and take out these bottoms, right? We have relative equal lows right here. These are all straight lines. The market hates straight lines. That's why it's important to manage your position. Don't get greedy. And as mentioned before, no fair value gaps created right now. This thing could easily just as plummet past this. Probability of a successful trade from here was high. From here it's lower. Well, we're at noon. Thanks for joining us today. Today is Thursday, so we'll be back live on Tuesday, 10:30 Eastern Standard Time. Please check us out at fractaleffects.com. We are preparing a few things that we're going to be going live with. Hopefully, we're going to start doing maybe certain markups on the weekends, but we will let you know. Make sure you hit that subscribe button. Turn on your notifications so you know when we're live. And have a great rest of the day.